Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, we are looking at one of the companies that are based in the UK, and we've talked about this company. I haven't actually talked about this company in detail recently. I've talked about it when I first bought it, so I want to go over today. Some of you have asked me recently just to look at it, and that company is this company here, Reckitt Benckiser, and or sometimes just call it RB for short. Here we go. That's the company. I own 42 shares of this company. I'm down about 3.5% right now. But this is one of the companies I've had I think I've added it about a year and a bit ago. So I'm going to show you some of the products they sell first, and we're going to go to details, and then I'm going to tell you exactly what I'm doing with this company going forward, inshallah. Okay. So this company, if you live in the UK or anywhere in Western world, you will see their product everywhere you go. My wife likes to buy these. They're basically dishwasher stuff or finished power ball, whatever it's called, is very expensive, but she likes them and she buys them all the time, regardless of how much they cost. So that's the kind of thing they sell. And one of the things that you realize when you go to the supermarket, you know, if you've got a family, you just pick up majority of the time. Although you're looking at the prices and so on, trying to find it cheaper, you know, this and that, but it's one of those things. Mother Mrs. likes it and she buys it, so I have no say in that. I just buy it. Things like Vanish and so on. They also have a healthcare product as well. Okay, so they've got loads of healthcare products, including Dettol, for example. Do you remember this during COVID time? That was basically what a lot of people were surviving on that. You've got the Gaviscons, you've got Nurofen, Veet, and so on, and other things as well. You got nutrition, which basically I only found out they had it when only when I started investing in the company. I didn't have the nutrition section in the business, right? So that is the overall the company. If you want to find out a bit more information, you can find out basically how much the company has made. So if you go to the investor section, you can find a lot of information for shareholders. You can find investing news, you can find regulatory news, and so on. There's so much information in there, and you can find the annual report for 2021. I don't think they reported 2022, or maybe they have, but yeah, there's a lot of information on their website if you want to find out. Now let's have a look at their financials. So the company, obviously, just to give you overall details, like we've just seen, basically the manufacturers sell healthcare, hygiene, nutrition products in the UK and the US, China, India, and so on. The company right now has a market cap of $41 billion. Okay, sorry, pounds. This is everything is in pounds. I'm using simply Wall Street to find the information because UK companies I found it easier in this website. So in terms of revenue, it's about 14.45 billion pounds and 2.34 billion pounds in terms of earnings. As you can see here, PE is actually quite low in comparison to some of the sectors. We will look at that in a second. Okay, and overall the company, in terms of the earnings per share, you get about £2.36 right now, gross margins of over 57%, and net profit margins of above 16%, which is really quite good. In terms of a dividend, they have 3.2% dividend yield, which is quite nice, but the payout ratio is about 56%. It would be nicer if that was slightly low, but that's fine. Their ex-dividend will be in about 22 days, so you still have 22 days until to buy the company to get paid for that dividend. Now, in terms of valuation, so now what we're going to look at to see in terms of price to earnings in comparison to the relative to the sectors and so on. Okay, we've already seen the PE is actually about 17.6. And when you look at the other companies, so when you compare with the direct competitors, companies like Unilever, for example, you can see our RB is actually about 17.6. Unilever right now about 15.3, which is actually quite cheap. I didn't think it was that cheap right now, but there we go. And Kimberly-Clark is about 21.5. Haleon, which is basically spin-off of GSK, is also 27 PE, and Colgate is about 33. This is interesting because I need to double check this if that is actually the truth, because that is expensive. I didn't think it was that expensive. But yeah, so that's basically where it is in terms of price to earnings, in terms of the overall. But now looking at the actual valuation, price to earnings, in a bit more detail. So price to shares, so share price is against the fair value. So right now the stock is trading about £57, but 76, or let's call it 77 is their fair value, which is actually quite nice. So 25% undervalued at the moment. And if you've realized, if you've seen it recently, I've been buying basically a bit more about this company. So what they do, this company is doing is simply Wall Street. They're using discounted cash flow model, which is actually quite good. But yeah, so it's about 25% right now discounted, which is actually nice to see. In terms of analysts and where they think the company should be, right now they're saying about the earnings will grow about 5.5%, so which is fine for this type of business. Normally basically household companies or household products, companies that sell basically household stuff, and normally have a quite low rate of basically in terms of growth side of things. But yeah, 5.5 is actually fine. In terms of EPS, basically we're looking at about 5.7. So not bad at all. So in terms of household products and earnings, about 10%, revenue growth about 3.7%, future return on equity 24%, which is really nice, and basically has a good coverage when it comes to the analysts. So it's not like a couple of people. So they actually, what does it say here? Yeah, more than basically 6, I think, is good. So they have more than 6 people looking at this. So this analysis is based on basically more than 6 people. It could be 10 people, it could be more, could be less, whatever. In terms of expectations and where the stock, basically the company is expected. By the way, this is the top line, this is the bottom line. So looking at the top line, bottom line, by the 2025, they're expecting the, that's not 2025, let me have a look. No, it is 2025. They're expecting about $16.2 billion of pounds of revenue, and 2.7, let's call it 2.8 billion dollars of earnings, which is quite nice. Now, if we add the free cash flow here, so just to see where we're at right now, it's about 2023. So 2.2 billion of free cash flow, which is really good, or closer to maybe around, maybe between 1 and 2, I will say, right now. And by 2025, we're expecting about 2.76. So not massive growth, but at least it's growing, at least it's heading in the right direction, and there's no decline if you think about it. Cash flow from operations is also similar, 3.31 billion pounds, if you like. Next, we're going to look at we're not going to look at the past performance. We are going to look at the financials, see how healthy the company is. This is my only concern in terms of short-term debt. The company liabilities, if you think about, okay, is 8.34 billion pounds, but in comparison to 5.29 billion pounds of assets. So it looks like the company that cannot basically cover right now their current basically short-term debt, but long-term debt is basically all like as assets is absolutely fine. So there's no issues. So right now, in the next 12 months, the company might struggle. Even says you do not cover the short-term liabilities, okay. But in the long term, basically, that's absolutely fine. In terms of dividend, we've already seen 3.18. That's where we're at right now. But in comparison to the sector, okay, so right now, this is the company in the market. The below the market 25% basically. When it comes to the market top is 25%. Or top 25%, if you like, is 5.9. That's too much. I think what I like where this company is just above 3%, which is really nice. But the forecast is about basically for the next 2 years. Okay, we're looking at the 3.6, which is not bad at all. So it looks like it's growing ahead in the right direction. As it says here, above bottom 25% payers in the UK market. In terms of more or less like the stable side of things, in terms of safety side of things, okay, it says here the dividends per share have been stable in the last 10 years, which is nice, and they have increased over the last 10 years. And if you basically, there's another website that I use sometimes, okay, and this is Dividend Max. If you live in the UK, it might be good to use this one. I put down my shares for 42 shares that I have of this company, and I should have received about £30 previously and expecting about £46 next May, basically around May time. So 24th of May, I should get that much. Now, if you look at the dividend history, okay, so the annual dividend, you can see they have been growing in the last basically 10 years. Since 2012, they've actually increased it every single year. So this data actually backs that up as well, which is quite nice. if we look at the management side of it, so I'm not going to look at management, I'm just going to look at the ownership. So one of the things that we like to see is insiders basically buying the stock. Okay, and the reason we like to see that is because then that means the company is undervalued and they think the company is heading the right direction, right? Because they have all that information that we genuinely don't have. But if you look at the basically September 2020, basically two, they have been buying. So this basically, these people, all of them have been buying. It could be just that there was some sort of a setup. These people, when they get the job, they might be given a stock-based compensation, whatever it is, but they have been buying quite a bit of that basically company. And at the time, it was about $60 per share, £60 per share. And right now, if you look at the price, okay, I think is £58 right now. So it's actually cheaper than when they were buying. So yeah, there's no it doesn't look like they have been selling any of their shares, which is actually tells us is good. Sometimes when I see them basically selling it, either is overvalued or there's something wrong with the company. There might be something going on. Again, it could be sometimes the CEO and the companies and so on, what they do is they set up such a way that the CEO will sell certain shares when they meet certain targets or the stock price hits a certain whatever. So don't read too much into it, but it's good to also keep an eye on insider trading as well, which is quite good. Right, so that is overall basically what everything I have for you. Now, just the only thing I'm going to look at now is Morningstar, and as you can see here, it looks like it's actually undervalued by about 12%. Okay, so again, this is also based in the US. Basically, I don't know, for whatever reason, in fact, maybe that's not the right one. I need to double check that, but it looks like it's undervalued anyway, according to 25% undervalued, 12% here. Either way, I really like the company. Whatever happens going forward, I want to own as many shares as I possibly can while it's still under £60 per share. And my average is 60. Okay, £60, but right now 58. So I will be buying more of it tomorrow and the next couple of days. I want to own at least 100 shares if I can. Okay, that will be nice. Again, I like the fact it's UK based. I don't have the FX impact and all that. It's just foreign exchanges. At the same time, it seems undervalued. They have great products. Okay, it looks like it's a decent business and is one of those companies that sell products where we just go to the shops and buy them. Maybe in recession times, okay, but right now it seems actually a good addition to my portfolio, and I'm gonna keep it. I'm gonna keep it in my portfolio. I'm gonna add to it, inshallah. That's my long-term plan. I hope you enjoyed the video. If you have already, please subscribe to the channel. Let me know if you have any questions. Also, don't forget to join us on the Discord and the so join the Patreon first, and then you can join us on the Discord. Inshallah, have a wonderful day. Assalamu Alaikum.